Hello everyone and welcome to this video. In this particular video, we are going to take a look at the Finviz Penny Stock Screener settings. So this screener is going to give us really good penny stocks, which are going to be great stocks fundamentally because they're going to be undervalued companies trading below their intrinsic value. They're going to be great technically because we'll take a look at the charts as well. These are going to be great for small accounts as well because if you don't have a lot of capital, these stocks, since they are cheap, they don't require you to put up a lot of money. So we are not essentially going to look at cheap stocks. We are going to look at cheap stocks which require less capital but are still great stocks to own. And we are also going to make sure that if you, like me, are into options trading, you can execute option trades on these stocks as well. So let's get started. A quick preview like usual, because I don't like to waste your time. I like to show at the very beginning of the video what all we are going to be covering so that you know exactly what this video is going to be all about, and if you want to continue, then you can continue. So the first thing we are going to look at is a penny stock definition, what a penny stock really is. This is going to be a very quick definition. The second thing is I'm going to explain the precautions that you need to take while trading penny stocks. Penny stocks, if you go out there in the market, a lot of people will tell you are very high risk and you should stay away from them. That's kind of true, but it's true for a certain category of penny stocks. The Finviz screener that we are going to use is going to be one which is going to produce results, provide us with penny stocks that are absolutely great. And so I'm not just going to say this. You can look at the screener, run it for yourself, see what stocks come in the output, and then you can research those stocks to see if you've identified really good hidden gems. So finally, we'll head over to the Finviz platform and we'll take a look at the exact screener. We'll carry out the settings. I'll explain each of the settings, what they mean, why I'm doing those, and how it modifies the output. And we'll see what companies come in the result, what stocks get listed in the output, and those stocks we'll try to see if they are actually good investments or not. Before we proceed, a quick look at the disclaimer, which essentially states that whatever information I'm sharing with you in this video is only for entertainment purposes. It is not any kind of trading or investment recommendation. So in case you want to trade, you want to invest your money, please get in touch with your financial advisor. So first of all, let's quickly understand what's a penny stock. Now, a penny stock is not actually something which trades at a penny. It's by the SEC's definition, this is any stock which is trading at a price below $5. So the good thing is that when we look at the screener settings, we can look for actual penny stocks, go with the exact definition, look for stocks which are trading under $5. At the same time, we can use the exact screener, but we can change the price to maybe $10, maybe $20. So we'll again get pretty cheap stocks which are trading under $10 or under $20, but are good buys. So that's the flexibility of the screener. We're going to look at the exact screener for Finviz screener for penny stocks. That's what we're going to be looking at. But then I'll also show you how, with a simple change of the price restriction, instead of looking at stocks which are valued under $5, you can put it as stocks trading at under $10, which gives you more stocks. If you have a slightly bigger account, then you can basically use the under $10 filter. If you have a very small account, you can look for stocks which are trading under $5. And the great thing about this screener is, if you want to trade in options, right, a single contract requires you to deal with 100 shares. So I mean, think about a company which is trading at $50. You need at least $5,000 to handle 100 shares. That means if you want to sell a put option, let's say you want to sell a 50 put, then you need to put up $5,000 of collateral. Maybe if you have a margin account, on some accounts the requirement may be less, but let's say on Robinhood you're not working with margin accounts, then you will have to put up $5,000. And if your trading account is small, it's going to mean one of the two things: either you cannot take the trade at all because you don't have that kind of capital, or you would be allocating a very huge portion of your capital into a single trade. That means your portfolio is not at all diversified. In fact, you don't have a portfolio at all. So what these penny stocks allow us to do is that basically you can, even with a, let's say, a $3,000 account, if I'm looking for stocks under $5, I can sell 6 put options with a total capital of $3,000. So that gives me quite a bit of diversification, helps me build a portfolio. If you want to understand how a balanced portfolio works and the importance and how it really keeps your account green, you can look at one of my videos on the same. I'll leave a link to that in the description. But for now, let's proceed. So this is really important. You will see a lot of advice in the market where people are asking you to stay away from penny stocks, and that's kind of right, because penny stocks can be really risky as well. uh, but the good news is that the screener settings that we are going to run are going to select stocks which are fundamentally good. That means they are fundamentally undervalued. These are good companies which have good analyst ratings. They have future growth potential, and so we are going to look at all the things. The important thing is we are trying to select stocks which are trading under $5 or maybe under $10, but we are not trying to essentially compromise on the quality of the companies which are for which those stocks are trading. So the quality is not being compromised here at all. Only thing is that the price is going to be under $5, and if you change the filter, maybe under $10, which will allow you to take smaller positions. So if you have a smaller account, you can take positions in these stocks, but in no way we are going to compromise on the fundamental, the technical setups, or any other way with the quality of the setup or the quality of the stocks themselves. One thing is there, which I want to call out: a lot of penny stocks, they cannot fulfill the requirements of being listed on an exchange. So they trade on something called the OTC markets or the over the counter markets. I would strongly advise to stay away from them, because on some of the brokers you can actually trade the OTC stocks, but there are two problems, inherent problems with OTC stocks. If a company wants to get listed on a stock exchange, they are required to produce the financial statements on a regular basis, and they have to get their financial statements audited, and there are a lot of restrictions, because when you want to get listed on the exchange, you have to do a lot of paperwork. You have to basically bring out a lot of information about the company, which is scrutinized, which is checked uh, by a lot of different people. So those companies are much more reliable. Companies which trade on the OTC market, they have very little regulation. They may or may not generate the financial statements on a regular basis, and even if they generate those, the authenticity is not validated, because these stocks are not trading on the exchange. The second bigger problem with the stocks that trade on the OTC markets is liquidity, because the very purpose of the stock exchange, the one purpose it fulfills it is that it brings the buyers and sellers together in one place. So you have a lot of liquidity because everybody is trying to buy something or sell something. So by default, anything which is not trading on the exchange is not going to be that liquid. I'm not saying that all OTC stocks have low liquidity, but if you compare the penny stocks that trade on the exchange as compared to the penny stocks which trade on the OTC market, the liquidity will be relatively very high for the ones that trade on the exchange. So, in short, the rule is we are not going to look at any penny stocks which are not trading on the exchanges, which are trading on the OTC markets. We are not going to pick up those stocks. So, again, I'll put this across very clearly. We are trying to look stocks which are trading uh, below $5 or below $10, but we are in no way trying to compromise the quality of the underlying companies that we select for investment purposes. So our companies are going to be fundamentally sound. They are going to have good technical setups. They're going to have good analyst recommendations. So we'll put all those features in. The only difference being that there is going to be a price restriction. So small accounts can also take advantage of these stocks. So let's get started. I don't want to take any more time. We'll straight away go to the Finviz platform and we'll start building the screener, and we'll see what stocks we get in the output today. So this is the Finviz platform. For those of you who are new to the platform, I'll leave a link to this in the description, and you can use that link to access the platform. Now Finviz has two versions. One is the free version, which I'm going to be using here because I want to show you all the functionality that you can use for free, but they do have an elite version as well, so check that out because it brings in a lot of additional features and it's not very expensive. So I have a complete video on how the elite version is priced and how it's useful, so you can check that out if you want. So once you're on this platform, you'll see that there are multiple tabs up here, so we'll go to the screener tab because that's what we want to do. We'll just close this pop-up advertisement which came in, and this is the screener which is available. Now there are four tabs over here. Basically on this particular tab I can set all the descriptive filters. Here I can set all the fundamental filters. Here I can set all the technical filters. I like going to the all tab because on one screen I'm able to set all the filters in one go. So now we'll start setting up the filters, and accordingly right now you can see 8,404 stocks are being listed here. So slowly, as I keep on putting more and more filters, only companies which satisfy those criteria will get shortlisted here, and that's going to be our final filters. So the first thing I want to do is I want to only look at stocks, only look at companies which are headquartered in the United States. So I'm going to select the country as USA. And the reason for this is very simple. This is something you can adjust from time to time. Right now, a lot of Chinese stocks get listed on the US stock exchanges. What happens with those companies is there's a lot of regulatory crackdown happening in China right now. So I don't want to select anything outside of the US because majority of the stocks outside the US will be from China. So I'm just filtering it by the country US. And you can see here that now only 7,242 stocks are being listed because from the 8,000 something that we had earlier, the rest of them were outside the US. So I've just filtered those out. The second thing that I'm going to set is I'm going to set a restriction on the market cap to be over $300 million. Now, why am I doing this? The reason I'm doing this is because I don't want to look at companies which have very, very small market capitalization. Companies which have very small market capitalizations, their prices can be really, really volatile. Because think about it, if a company has just 30, 40, $50 million market capitalization, even a $5 million sale or a $5 million investment means that the prices can really get shot up, right? So those companies will usually have very really volatile prices, which are susceptible to huge swings. We don't want to get into those kind of stocks. We want relatively more stable stocks. We obviously, when you're looking at penny stocks, you cannot essentially look at companies, the largest companies in the world, but then $300 million, above $300 million gives us a quite a decent company which will not have that volatility in price. And also these companies, because they have significant market capitalization, they will have enough cash at hand, and a lot of other things that we're going to see, um, those are going to work out in our favor. So $300 million is going to be the filter for the market capitalization. So we have two filter set. Now you can see the number of stocks is down to 3,511. The third thing, obviously this video is about penny stocks, right? So let's first of all go with the fixed definition of penny stocks, which is any stock that is priced under $5. So I just selected the price to be under $5. Now we'll select only those stocks which are priced under $5. So I'm getting 103 symbols here. The next thing I want to do is I want to make sure that the analysts are giving a buy or better rating. So I'm putting that filter here. So this basically means that on the average, we are only selecting stocks where the analysts are positive about the future of that stock. They have a buy rating or a strong buy rating on the stock, and only now 65 symbols are being listed here. We also want to make sure that if the analyst rating is buy or strong buy, the stock has still not reached the target price. The target price is kind of still far away. So that is basically here target price. I'm going to set this to above price. So what this means is whatever target price, the average target price that the analysts are setting for these stocks, the stock is still yet to reach that price. So there is potential for the stock to go up as per the analyst recommendations. So now we have 58 stocks being listed here. If you trade in options, then you can put the filter here for optionable ones. So out of the 58 stocks, the ones which did not have option chains, because all stocks do not have option chains associated with it. So three stocks did not have option chains. Now those are also filtered out, and we are left with 55 stocks. Now, as I said, we're going to select fundamentally good companies. So one of the indications, if you are aware of how fundamental analysis works, uh, is that the return on assets on those companies should be high. And because the return on assets basically gives us a picture of what return we can expect, how well the assets that are handed over to the company are being utilized. I have a complete video which is a Finviz Screener video on selecting great companies based on fundamental analysis. So I'll leave a link to that in the description. You can watch that. But for now, I'm going to select the return on assets because this is going to indicate companies, if whatever assets they own, how well are they being utilized. So if ROA on a company is 20%, that means whatever assets have been given to those companies, the company is able to utilize those assets and generate 20% returns on those. So if I have two companies, one generating 20% ROA, another generating 15% ROA, it's common sense for me to go in with a company that's generating 20% ROA, given that rest of the things are same. So this one I'm going to select over 10%. So we want to make sure that the company, whatever assets it has, it's generating at least 10% of that in terms of the uh, earnings. And now you can see that we are down to only three stocks. And these three stocks, we will just set one more filter here, and that is the sales growth for the past 5 years has been over 10%. So now only one stock is coming up here. So this is where you need to adjust the filter from time to time. uh, for now, let's remove the sales growth because I want to show you something else. I also want to look at stocks which don't have a high price to earnings ratio. So ROA is basically going to give you stocks which are generating good returns. At the same time, you'd want to select stocks which are trading cheap, which are not very expensive. Price to earnings is a measure of how expensive the stock is. So I'm going to select under 20. So what this is basically going to do is it's brought up only two stocks over here. So what it's basically doing here is it's making sure that I am buying good companies, but I'm not buying good companies which are expensive right now. I want to also buy good companies which are cheap. So you can see here two symbols are being listed. Now the settings that I have done right now, these are very aggressive. So I would suggest that you start with these settings, and if you get two uh, very less symbols or very less results in the output, then you can tweak with this filter. You can basically set the market cap to plus micro. So now we are looking at companies above $50 million. We will manually not consider any companies up till $100 million. So we look for minimum $100 million capitalization. Now you can see that even with the price to earnings and the return on assets filter, I'm getting 9 companies. So this is a much bigger list. And if you look at the market caps over here, right now, this company BDSI would have been dropped just because it's $6 million short of $300 million. So there's no point dropping these companies. Obviously, this one with 52 millions, I'll not consider this because this is very close to the $50 million. But companies which are close to $300 million, I'll still end up considering those. And now let's try and put the sales growth as well. So you see 6 companies are being listed. Let me put the EPS growth also. Yeah, so now 5 companies are being listed. So 5 stocks being listed, that's a sufficient number of stocks, and you can select one or two of these will definitely be good companies. Let's take a quick look at what we have done till now. So first of all, we set the framework filters. That means I just selected stocks in the United States. I selected stocks which were optionable. I selected stocks which have a market cap of minimum $50. We don't want to go into the nano cap and the micro caps, very small stocks. Uh, and we also selected stocks which are trading under $5. So under $5 is the definition of penny stocks. So any stocks which are being listed right now are penny stocks over here. Then for fundamentally these stocks to be good, what are we doing? First of all, we are looking for the ROA to be above 10%, which is very important because this is the return that you can expect that the company will generate on the assets that it has. So this is very important. This shows you how well the company is performing. The second thing we did was we kept the price to earnings to under 20, which basically means I'm buying good companies which are not expensive. P2E decides whether a company is expensive or not. These companies are not expensive. Then we are looking at the sales growth for the past 5 years. We are looking at the earnings per share growth for the past 5 years. So how is the past track record of these companies? Is it good? Are these companies consistently growing over the last 5 years? The answer to these questions is yes for these 5 stocks. So those 5 got listed here. Finally, we don't want to go against the analyst, so we put two screeners here where the analyst recommendation is a buy or better, not even hold, buy or better, and then we put the target price above price. So you can see that this screener is basically putting so many restrictions. We're trying to select fundamentally good companies. We're trying to select companies which have positive analyst recommendations or positive market sentiment. We're trying to select companies which are optionable, which have option chains. We're trying to select companies which are under $5, so it doesn't have huge capital requirements. And also we are looking for companies which are at least above $50 million in capitalization. And in fact, out of these 5, this is the one which is below 100 million. So rest of all these companies are above $100 million in capitalization. So now what we can do is we can look at the charts, and let me select the candlestick charts, and I'm going to go to the weekly charts because I start with weekly and then I move to the daily time frame if I get interested. So in these you can very clearly see that BDSI is undervalued, and also this is one time, the second time, the third time. It's basically reaching, for the third time it's reaching a very strong support level which is around $3. So this is going to be a good candidate. Same way if you look at ELA, this particular company is into retail, and it's also trading at close to its support levels. This is in a downtrend, so for now I would avoid this. Anyways, I think this is the one which had the $52 million. Yeah, so this I would avoid this because the market cap is very low, and the second thing is that this is in a downtrend, so I would avoid this. OESX, again, we can consider, a reason being that it was in a downtrend, but now it's consolidating. And ATRS definitely is close to a consolidation, but I would still wait to see some upward movement because it's in a slight downtrend. So for me right now, BDSI, ELA would be technically good setups because they are trading at significant support levels. This is a strong support once, twice, third time consolidating at the same level. So this kind of is not trending downwards anymore. These are sideways consolidations. This is hitting a very strong support. So as soon as we see a reversal pattern here, we can get into that trade. So right now we put a strict restriction of under 5. Let's change this to under 10. As I mentioned, our objective is to select stocks which are not very expensive so that we can trade with small accounts. So as soon as you see I change the price to 10, now I'm getting much more results. I'm getting a total of 8 results right now. And again, CXDO, look at this. This level is a kind of a strong support, and we have a candle with a long bottom. So you can research this company, see what it does, try to understand its services, and if you like the company, if you see future growth prospects, I mean, all that is already factored into the filter here, the screener here, right? The analysts are already saying that this is a buy or a strong buy recommendation. The target price is still not reached. It's fundamentally cheap. It's not an expensive company. So all these filters have already been put. All the only thing I think manually we need to check, because we selected above $50 million, is that we don't want to select any companies which are trading at under $100 million or even $200 million. It's up to you the way you want to set it. And ELA, uh, BDSI, CODX, all these are good setups, and you can see here basically that these are fundamentally sound companies. They have good analyst recommendations, and basically these are the outputs of the screener which we can research further to understand the risks around them, and then if we want, we can invest into these companies. And also all of these companies will have option chains. Some of them may not be liquid, so you may still not, although the option chains exist, but they may not be liquid, so you may not be able to use very far away from the money options. But definitely whenever options exist, options which are trading close to the current price, those strike prices are actually, you do have some volumes there. So this particular screener takes care of that as well. So, since we just talked about volumes, one thing that again you should do, we discussed this during while we were looking at the slides, was that we want to only deal with liquid stocks, right? So you can also select this filter here to select the average volume to be over 100,000 shares. Now, 100,000 is not a very huge amount of volume, but think about it, that you are trading with a very small account. That's why you are getting into penny stocks. So for you, taking 100 shares, which is enough for one contract, is enough, maybe maximum of 200 shares. And if the volume is 100k per day, you are, even if you take 100 shares, that's a very small percentage of the overall daily volume. So now you can see, instead of 8 stocks under $10, I'm getting only 5 stocks, but these 5 stocks will have high liquidity, and chances are their options will also be much more liquid. So again, we'll also look at the under five one with the volume filter. Still, we are getting 3 symbols over here. So this particular screener is going to give you lots of results, and make sure that you're using the market cap as I have explained, and you're using the volume filter as I've shown here, because this will make sure that you don't end up with stocks which are too small and too volatile. That's the main purpose. We want to be trading in stocks which are intrinsically undervalued, which are fundamentally good, they have good returns, which are being proposed by analysts as buys or strong buys. But at the same time, we also want to make sure that we don't pick up something which is going to be very choppy, very volatile, which is going to create a lot of anxiety while we hold on to that position. So that is the entire purpose of this screener, to make confident, informed trades and stay away from very risky, very volatile trades, which can create a lot of confusion and panic. And in that panic, you're basically you can end up taking wrong decisions and selling those at a loss when you should be actually holding on to them. So I hope the screener is clear, this particular screener is great because it's giving you the same quality stocks that we would normally see on the mainstream media, in terms of their fundamentals, in terms of the analyst recommendations, but at the same time these are trading at a low price. So this is really good for small accounts. Now I would still suggest that you do more research on these stocks to understand, because these are not, when you get these symbols, you may, these are not like Netflix or Amazon which everybody knows about. So you may not know the exact product or the service that these companies deal with. So definitely go and investigate what this company is doing, and if you see any risks, anything too negative, stay away from it. But otherwise we've done enough filtering over here, as I've already explained multiple times, to make sure that we eventually end up with good investment opportunities. So hopefully this video is going to be useful for people having small accounts, and even people with large accounts. If they want to deal and trade in penny stocks, they want to get a lot of diversification by investing into multiple companies across sectors, this is an ideal screener to be used, because as I've said multiple times, we are not compromising on the quality of the stocks. We are simply focusing, changing our focus from the stocks which are trading at 200 $300 to stocks which are trading under 5 or under $10, which allows us to take more the smaller positions, and more number of positions with the same given capital. So if you find this video useful, please like the video and subscribe to my channel. It gives a huge feedback to me that whatever content I'm creating, people are finding it useful, and that motivates me to continue creating similar content. If you have any questions, if you have any suggestions, please leave them down in the comments and I'll respond to you. Also, please share this video with as many people as possible. Spread the word, because I feel that I'm trying to help people establish an understanding of how to trade, how to invest, and gain their independence. So if you can spread the word, it's going to help in a big way. So thank you for your time, and I'll catch you guys in the next video. Thank you.